Home prices increased at the fastest pace in recorded history last month. Hey, and welcome back to the Vancouver Life Real Estate Podcast and YouTube channel. Today we are going to go over the monthly stats of what happened in February. But first, the big news, of course, is that the Bank of Canada raised interest rates. We're recording this on March 3rd, so it was yesterday. Quarter point, wildly expected to have done so. It did happen. What does this mean? I guess first off the top, quarter point will mean about 2 to 3% less buying power for somebody. So if you had a mortgage pre-approval last month for $1 million, or you got one this month, it would be about 2 or 3% less, $2,000 or $3,000 less in buying power, as an example. But of course, what does this mean if you actually have a variable mortgage in place now? Well, it means that your payments are going up. On average, let's say the average mortgage is around $700,000. You can expect to spend about $80 more per month. Variable rate mortgages right now, I think they're at about it may be an all-time high as far as how many of them are in place. I think it's something like 45 to 50% of new mortgages are variable. And this is largely because they are about a full basis point lower than what the fixed rate is. So out of the gate, your payments are definitely going to be lower. Again, because this was expected, I don't think there's been too much of a knee-jerk reaction. I think the people that were thinking about buying a home in 2022 have already got their mortgage either in place or the rate hold in place. Rate holds typically last 3 to 4 months. And part of that is, I think, what's causing this rush to market that we're seeing, because it is now official. And while a quarter rate won't do that much impact as far as affordability goes, it will have more of a psychological effect on people going, okay, well, this is the first time rates have increased in 4 years. It's a different environment, and chances are things are going to continue to go up in the rate space. So why not get in now before things get more expensive?
I also think, when it comes to rates, especially when it comes to variable, versus a fixed rate, like if the 5-year fixed rates are so much higher right now than the variable rates. And while yes, we are anticipated to continue to rise in the rate field, there's a lot of things happening in the world right now that could change the economic outlook. So it's important for people to also realize that those rates could go back down. I don't think we're looking at that right now, but depending on what happens here in the near future, while we need to get a handle on inflation, the market has its own forces too. And we'll start to see how those impact. I think a lot of people also felt that we might have seen a 0.5% increase in interest rates. But I think the government is being very careful about not overcorrecting and pushing the economy back the other way, because that would be a much bigger problem. So it's important to keep that in mind. Don't panic right now. You got to remember, if you're in a variable rate mortgage and you want to sell or get out, you have a 3-month penalty. Whereas if you're in a 5-year fixed mortgage, it can be upwards of 3% of your mortgage. So there are a lot of reasons why people are taking variable mortgages versus fixed rates. It's important you speak to your mortgage specialist to understand that and make sure you're doing what's best for you.
Exactly. I think this month too, because this is a changing interest rate environment, we're going to have a mortgage specialist come on and kind of talk about what rising interest rates really mean, what they really mean, and what happens if they go up a full point or more. And of course, the options that you'll have either as a homeowner or a prospective home buyer. So look out for that. Okay, should we get into the month of February for stats, Ryan?
Yeah, the stats were released and they're pretty gnarly, to say the least. Again, it's hard to know how this interest rate hike is going to affect people going forward in their behavior. I mean, certainly they're going to maybe think about it a little bit more, but again, I think this was largely anticipated, so a lot of people were prepared for this. So it doesn't really come as a huge surprise. And I don't think we're going to see a huge shift in the market at 0.25. That being said, I think the stats kind of reflect that. So Dan, why don't you get into the total sales and we'll take it from there.
Sure. So we saw just over 3,400 homes sell last month, and that was about an 8% decrease compared to the February from last year. So very active, but generally that decrease was likely because of the vast decrease in the actual available homes to buy. Understandably, sales jumped considerably since January, up about 50%. But that's typical. January is typically a slower month. So February has seen things pick up tremendously. And those activity levels are definitely going to continue into March and April here. Again, big picture, let's pull back to the 10-year average, sitting about 27% higher than the 10-year average for February. January was 25%. So again, we're seeing this acceleration in the market right now. Things are so pinned to the top, they're so extreme, and yet somehow they're finding a way to escalate.
Yeah. And with that being said, in the month of February, when it comes to new listings, we saw 5,471 come out in February. That's actually an 8.4% increase compared to the February of last year. That 8.4% is very welcomed. We're also seeing a 31.2% increase in new listings since the month before. And I think some of our very active buyers have recognized some of that, especially if they're looking for some single family homes. The vast majority of product on the market was not in the greatest shape. It wasn't the best property. So it's really nice to see some increase in new listings. But I don't expect that to hang around with the levels of demand that we're experiencing. A lot of those new listings, will just get completely eaten up. So they won't last on the market. It's not going to be a long-term reprieve or anything like that. But it's nice to see some more listings come onto the marketplace.
Yeah. So again, that 31-ish% increase in listings is far below the 50% increase in sales. So it is definitely getting chewed up, like you mentioned. And so that leaves us with where our inventory is, sitting at about 6,740 active listings right now. This is down 19% from this time last year. This is why things are still feeling incredibly tight. So if you remember, February 2021, last year, this time was the beginning of the fastest rise in property prices ever recorded. And there were, 35% more homes on the market back then. So what does this also mean? So 19% increase compared to last month. So yes, people are listing. Typically, we do see this. So it's nice to see it come in higher numbers here. We had a net gain of about 1,080 new homes in active inventory from January. And we're about 1,500 new listings since the beginning of the year, which again, we're 6,700. Keep in mind that balanced market, we need to be about 2.5 times the active inventory to be in a balanced market, not even to get into a buyer's one. So we're quite a ways off of that.
Yeah, we still need like 12,000 plus listings, right? Before we start to see any kind of balance take place. Actually, at this rate, it's probably more like 14,000. But anyhow, let's talk about sales to active ratio. Talk about the buyer behavior. Like I said, the demand from earlier, it just hasn't waned at all, right? So the sales to active ratio across the board is 50.8%. Call it 51%, right? 12 to 20% over a 3-month period puts you in a balanced market, to give you some perspective. And that is up 10.5% from last month. And this is the second highest ever, dating back to the record-setting time of 2016. Our sales to active ratio is also 10% higher than it was this time last year. And prices were continuing to rise faster than they ever have, right? So the demand for homes hasn't changed. People still need a place to live despite maybe the price, and we're still seeing that. So specifically by asset class here, so 35% for detached homes, right? Still very good, strong seller's market. townhomes, the insatiable appetite for townhomes is at 64.3% and 62% respectively for apartments. That is astounding for apartments, guys. That is the highest we've seen in 5 years. The last time we saw numbers like that was August of 2017, right before the foreign buyers tax was implemented. So again, and I just want to just say this because the government does have a tendency to overcorrect, right? And or add a new tax, and it wouldn't be beyond the provincial government to be tabling something like that, in my opinion. Anyhow, we'll see who sticks their fingers in the pie here. But again, I'd like to see the implementation of interest rate hikes come into place. I think that will really cool the market, but we do have to give it some time.
Yeah, I want to talk a little bit more here too about this 62% ratio on apartments, because again, we saw that pendulum swing all the way out to detached homes for most of last year. Then the interest got pushed down to townhomes, and condos, for the most part, were left in the dust up until around fall, winter of last year. And then it really started picking up. And now we're seeing it again, like Ryan mentioned, the highest since 2017. Why is the focus on condos right now?
Because there's nothing else to buy.
There's a bit of that. Yeah. I think because prices have gotten so high in the other two home types that apartments are more appealing. And I also think, and we'll get into a little bit of this more later, because the market has been so incredibly bullish for 2 full years here now, a lot of what we're seeing are people just want to get into anything. And of course, that generally means if you're getting into something new for the first time, it's going to be the lower price point, meaning a condo. And of course, too, we know investors are buying more homes than ever right now. And typically, those are going to be condos as well for price point purposes and availability purposes. So that the interest is shift into that asset class now tremendously, as we're seeing in the ratios and prices here.
Yeah, and I really tend to agree with that, especially when you look at the fact that, well, we'll get into some anecdotal stories, but we were involved in our team was involved in a number of single family transactions in the last month, where it was an outrageous amount of people trying to buy these homes. And to me, it makes a lot of sense that if there's a bit more inventory of a condo, and let's say you're an investor looking for maybe a duplex or something to that effect, you could buy 2 condos for the same price and have more luck getting it than you would actually trying to buy something else too, right? So exactly. It's a strategic, I think, decision on a lot of investors.
So here we go. So we've talked now about a few metrics that were even stronger than they were in February of last year. And that's, like we mentioned, when the prices took off at the highest rate ever. So if you have the metrics that are even stronger now, what's going to be the result? Prices going up at even a faster rate than we saw last year. So here's the numbers. The HPI, the home price index average for a typical Vancouver home, $1,313,000. We are now looking at almost a 21% increase from last year. But here's the kicker. We are up 4.6% last month alone. That is the highest 1 month percentage increase ever recorded. That is $58,000 just last month. We are up $83,000 in HPI since the beginning of this year. $83,000 in 2 months. So you got to think. If you take January and you take February, you combine those two, that's 6.8% increase already in 2022.
Yeah.
6.8% home prices are up. We shouldn't see that in a year, let alone 2 months. Now, imagine if that pace were to continue. If it were to continue, which it's not going to.
It can't.
We've also seen things that should not have happened in the last 24 months. Yeah. We would see a 41% price increase in 2022. Twice that of 2021.
And 2021 was insane. So, to me, it's I don't really know what to say to that.
Okay, but here's the question, I guess, Ryan, is we've seen extreme price increases for 2 full years now. We've seen extreme acceleration in price increases. And here we are today talking about it being the highest in history. So why? How can this be happening? Why is this happening right now? And we've got a few pointers or I guess ideas and data points to explain why this is happening now. Ryan, you want to start with yours?
Yeah, I mean, well, there's a number of things. I mean, ultimately, when you look at permanent residents here, right? Our government is increasing the amount of new permanent residents for the next year and the following years beyond that. We're actually looking at over the next 3 years to increase our population by 1.35 million people. And as I've always said, the economy needs that to continue growing. But what does that mean for our housing policies, right? We're just not building enough homes. And when you look at that comparatively to the States, because the States is having the same issue, but they're bringing in about 500,000 people a year and they're 10x our size. So we want to talk about price acceleration. It's due to demand. And we just simply don't have enough homes. We're not building enough homes. We're not going to meet anywhere near the quota required to bring prices back into a realm that makes sense. Now, we can curb some of that with interest rate hikes. So I think the start of a change may be taking place. But again, don't underestimate that level of demand and the systemic issue of supply that we have. It's not just going to get fixed with interest rates. Interest rates is part of the tool. It's not the tool, though, right? And then you add in a ton of other factors. And Dan, I'll let you touch on some of those. But ultimately, that time's scaring people with money never being this cheap again. Yeah, you're going to have some FOMO.
For sure. Like we touched on earlier, there's, they had all-time high permanent residents admitted into Canada last year. And of course, a major chunk of those come to British Columbia. So we've got more people. And we know statistically, data-wise, there's simply less homes. So your simple supply and demand right there alone are talking about why prices are continuing to get pushed up. Mm-hmm. The rate scare, yes, we're in the first environment in 4.5 years here where money's getting more expensive. And for a lot of people, they haven't seen that, especially not if they're new in the housing market. So there's a bit of a scare there. So yes, get in while it's inexpensive. High prices are almost a self-fulfilling prophecy in the sense that we've seen a lot of people leverage the equity that they've seen in their homes in the last 2 years, averaged up 30% or $300,000, let's say, to buy secondary homes, whether they're buying first-time homes for their children or they're buying investment properties. We still know investment properties are the leading type of new mortgage at 25% right now, 1 in 4. So you've got more people owning more homes than ever before as well. And the FOMO thing, I think, is incredibly real right now. All we've seen is 2 years of, you can't go wrong, prices are going to go up forever kind of environment. Obviously a dangerous one to believe in, but one that a lot of people are seeing like, look, I'm just seeing this train go by. And if I don't get on it, if I don't get anything, I'm going to be forever left behind. And so we're seeing a very frothy low end of the market right now, because I truly believe people have that instinct or that feeling that they must buy something to be even considered in the future type of thing. And I think all of those factors combined are, people fighting for scraps right now. And when we're still seeing 25 plus offers on properties in some areas, you feel it as a buyer. You're like, okay, well, the interest, the heat level is still there. So what can I do? What can I do? And that type of mentality was what's resulting in these extreme numbers. So yeah, Ryan, did you want to add something?
No, I completely agree. It's just, we haven't seen this level of immigration since the post-war era, right? And that's due, in fact, to the baby boomer generation retiring in significant numbers, right? So to replace the workforce, we need to replace them in order to carry on. So the immigration numbers aren't the problem. It's building enough homes to supply them with it so that everybody who's already here doesn't get screwed by that.
Exactly. So, all right, we talked HPI, but we like to talk about the other two metrics as well to keep it fair here. The median price just hit $1 million for the first time ever. And that is up a whopping $75,000 from just last month. We're up $91,000 this year.
Whoa.
The average price, hey, another all-time high, $1,347,000, up $64,000 from last month, up $108,000 this year alone. Clearly, all three price metrics are at an all-time high. If you were to combine them, or pick whichever one you want, but we'll combine them, we'll average them out. Homes in 2022 have gone up at the rate of $1,600 per day every single day.
You just can't earn that, Dan.
You can't. And this is what I mean. Why people seeing, these prices going up and saying, I'll never be able to save that much to catch up. So I just better buy anything because these prices they're going to go up and up and up and up.
And as a statement, we're not telling you to buy just anything. That's a sure way to end up in bankruptcy pretty quick. These decisions need to be made carefully, but $1,600 a day, that's also tax free, right? If it's your if it's your primary residence. So I don't know how that's like $180 an hour, right? To live in your house. That's incredible. That's inflation in the market. There's a number of reasons that that's taking place, but this is why 3 or 4 months ago, maybe, Dan, we did a pod on why having cash is trash. Mm-hmm. And this is exactly why. Your cash could be working for you if it's in a pre-sale, in a resale, or in some form of real estate, right?
Yeah. So let's break down prices by property type here. For those listeners and watchers that have, let's say, are in a family home or in a condo, they may want to know a little bit more specific what their property is looking like this month.
Yeah. So for single family homes, we had just over 1,010 that sold. That's an 18% decrease in sales volume since February 2021. However, the average price for a single family home is now $2,044,800. That is a 25% increase from this time last year. And a 4.7, that's massive, a 4.7% increase compared to just January of last month. We also predicted that the price would break 2 million by March. It did happen in February, but my goodness, we just didn't see 4.7% coming for single family homes in 1 month. I don't know if anyone could have. Dan, you want to touch on apartments?
Yeah, sure. Just over 1,850 condos sold last month, 5.5% increase from this time last year. Average price now, $808,000 for a condo.
Wow.
Yeah, 16% increase from this time last year and a 4.1% increase from just last month.
And townhomes remain as arguably the most sought after asset class because of their price point and location. You can get into the suburbs, or you can get into pockets of Vancouver without paying single family home prices. We have seen a 560 townhomes sell in February. That's a 24% decrease compared to the same time last year. An average price point now of $1,090,000 for a townhouse. And that is a 27% increase in price since February of 2021, and a whopping 5.9%, call it 6% compared to last month. That's one of the major drivers here, right? So if I'm just looking at data here, I'm going, my goodness, the market wants more townhomes. It's buying everything, but the market wants more townhomes. So we need density in the single family neighborhoods to provide more townhomes.
This is why we love looking at the sales to active listings ratio so closely, because if you remember earlier, townhomes was the highest sales to active listings ratio, and here it is increasing at the highest price appreciation rate. They are so connected. That's why it's important. Okay, so a couple more metrics here. Days on market. We just dropped. We're even quicker to sell. Last month we were 10 days on average to sell a home. We're now at 8. 8 days it takes on average to sell a Vancouver home. This is matching the March, April, May 2021 era.
Mm.
And my goodness, April of 2016, we're actually lower than that time. It was 9 back then, and we are currently
Wow.
at 8.
Wow.
Yeah, so it is the lowest in history. We've never seen a 7 before. Again, March, April, May of last year, there were 8s.
Mm.
April 2016 was 9, and here we are in a February seeing an 8 days on market environment.
Oh, that's crazy.
Average price per foot increased another 3%, another all-time high metric. The average home now, $883 a square foot.
Just for average homes.
Yeah. Yeah, that's up $26 just last month per foot. This one skyrocketed. The percent of sale price to list price. You list for $1 million, you sell for X. It's at 105%, 105.5% of list price.
Yeah.
This is the all-time high.
Yeah.
This is the highest it's been. And it surpassed April of 2016, which we reference a lot because it was absolutely bananas then. It was 103.3%. We're a full 2.2% higher than the previous all-time high.
So if you see an average home listed for $1 million, at the very least, you could expect it to go for nearly $1,060,000.
Mm-hmm.
Right?
That's the average number. Yeah.
Yeah. And we've got a lot of stories that sound like that, unfortunately.
Yeah, for sure.
I mean, the vast majority of, well, okay, so a couple things, because there's some strange things happening in the marketplace too. We've actually, in the last month, maybe, we've seen some really spotty stuff where we've seen, in Burnaby, for example, we were offering on a property over there, or one of our team members was, Dan, did they get 22 offers on a single family home? I think it was listed for 1.5 and it sold for 2.2.
Yeah.
That's obviously way more than 105% over the list price. That's more like 50% over the list price, or more. But further to that, in the same week, we were offering on some respective apartments a little bit more in the local area here in Kits, and we didn't even see any competition. So yet, that does kind of speak a little bit to some behavior, right? And where maybe I don't know if I could say it, but it feels like we're right at the crest here where people are rushing to try and get stuff in. We're seeing some more product hit the market, but everybody's vision is on a particular asset, right? I think if we continue to get some more listings, we might see some more disbursement of buyers. But even to that effect, we were offering on a property in Point Grey. It was listed for 2.6. They also got 13 offers, and it went for $400,000 over the list price. So in one instance, you're going into an environment where you're thinking you're going to compete, only to find out that you're not, which is confusing. And then on the flip side, you're wondering if you're going to take that same anecdotal story into another property or asset class and then just get absolutely spanked. So it's very unpredictable in some ways. But I think that's indicative of maybe some change taking place. But again, remember, all of this data is latent, right? So what we're experiencing today may show some reflection in the coming months, but it has to maintain, right? It's hard to know.
Spotty markets are quite indicative of the beginning of the change. So it feels like we are at day 1 here of the market finally shifting. And also, I think because we've been running hot, we've been running in the red for so long, and this month is just an extreme example of that. It's so unsustainable. It's like the engine is running, it's about to overheat, and the gasket's about to pop. You feel it. And we are seeing the day 1 sort of examples of that. So yes, things are going to calm down, but calming down off of a 4.6% month, like it's not going to go down tomorrow, but we are going to see it flatten out. And again, our predictions right now are likely to see a much different market by summer. Things are going to calm down by summer. We will likely see another 1/4 point interest rate hike by then, and people are going to pull back. There is still things like buyer fatigue, and man, the metrics They're still pointing up, but I think they're pointing up for about another 6 months.
Yeah, it's really, um, with interest rate hikes taking place again, the first time in 4 years, that means the environment is in a different position than it was even just 6 months ago, right? So the Bank of Canada has obviously recognized that inflation has become an issue. It might not be as transitory as they thought. Shock. That's what happens when you print a bunch of money. But when it goes into property, because that's the flow of credit was so easy to do. Are we going to see a huge correction? I don't think so, but I do think we're going to see some tapering, which would be great and very welcomed for buyers. So again, we're talking about some record months in terms of price appreciation and in terms of buyer behavior. But I do think with a changing interest rate environment, you're going to start to see more and more buyers take a bit of a wait and see approach. They're reading more headlines. They're recognizing that some changes are taking place. And some of them are going to be getting haircuts, right? Because of the interest rate hikes taking place. It won't be huge, but some of them are.
Let's talk on this, the recent vote to ban foreign investment.
Yeah, the Liberals voting it down.
Okay. So let's go back a step here. The Liberals campaigned on that promise.
They did.
And then they voted down their own promise.
Mm-hmm.
So the promise was we're going to ban potentially here foreign investment, no foreign buyers. We were already taxing them 20%, but we want to ban them completely like what they did in New Zealand, because that will solve housing prices. And now they just voted it down. They're not doing that.
Mm-hmm.
So if you need yet another example to, I don't want to just say not trust the government, but look, high home prices benefit the government. I didn't create this environment. Don't shoot the messenger. It's just the reality. And here's another example of them showing that.
Yeah, I mean, when you look at property transfer tax, right? When you think about the billions of dollars they're pulling off of these transactions, the higher the transaction price, the more taxable revenue they get, right? So is it really in their interest to lower prices? I don't know. I'm not seeing it. And then when you've got 76% of Canadians that own their home, and they all tend to benefit from that price appreciation to some degree. I mean, only if they're really getting out of the market, then that's going to make some other voters quite happy, right? But again, as we've always said, foreign investment makes up a small percentage of home buyers here, right? A lot of home buyers here are either trying to buy their second property. They're already here. They're either permanent residents or they're citizens, and they're taking out equity and buying a second property. So is it really foreign investment that's the issue here? No, but the issue is really that they made a promise and that they lied. That's kind of the issue. Because even if they did this, I don't think you would see a huge change in the marketplace, right?
You would.
I just don't. We've seen foreign taxes come in and not change anything. Right. I mean, the original foreign buyers tax came in and it cooled the market for 6 months. And then 6 months later, we were higher than that. And here we are miles above that now. Right.
Well,
so
look to New Zealand. New Zealand banned foreign buyers in 2021 and saw the highest home price appreciation in recorded history.
So there you go.
There's your proof.
Yeah. It's just like they stepped on their own foot here, because it was a promise that sounded good at an election time, but without explaining, why it's not going to change anything. Now they just look like liars, which they are. But anyways.
And there we are. So interesting environment as always. Lots to talk about in the Vancouver real estate space. If you are thinking about buying or selling, obviously your situation is going to be super unique, and we would love to help explore it and explore options and let you know what our opinion is and if it's a good idea or not. So as always, thanks for watching. Thanks for listening. Please reach out to us. We are at thevancouverlife.com for all your real estate needs, and have an awesome day.